Not long ago, innovation was everything. If a company wasn't moving fast, launching new products, or disrupting an industry, it was seen as falling behind. Investors rewarded bold ideas, rapid expansion, and constant change. The companies that moved the fastest often won the most attention and the most money. But now something is changing. Across industries, stability is starting to matter more than innovation. Not because innovation has lost its importance, but because the environment around it has changed. And for many companies, the cost of moving too fast is becoming harder to ignore. To understand this shift, you have to look at what businesses have gone through over the past few years. From supply chain disruptions to inflation, rising interest rates, and unpredictable demand, companies have been operating in a much more uncertain environment. In that kind of world, constant experimentation and aggressive innovation start to look less like opportunity and more like risk. Because innovation isn't just about new ideas, it requires investment, time, and a willingness to accept failure. And when the margin for error gets smaller, companies become more careful about where they take those risks. That's where stability comes in. Stability means predictable revenue. It means consistent operations. It means knowing that your core business can perform reliably even when conditions change. And right now, that kind of predictability is becoming incredibly valuable. Investors are a big part of this shift. A few years ago, markets were rewarding growth at almost any cost. Companies that were losing money but expanding quickly could still see their valuations rise. But that mindset has changed. Today, investors are paying closer attention to profitability, cash flow, and long-term sustainability. In that environment, stability becomes a signal of strength. A company that can maintain steady performance, manage costs, and deliver consistent results is often seen as less risky and therefore more valuable than one that is constantly chasing the next big idea without clear returns. This doesn't mean innovation has stopped, it means it's being approached differently. Instead of betting everything on breakthrough products, companies are focusing on incremental improvements, small, consistent upgrades that enhance existing offerings rather than replacing them entirely. It's a quieter form of innovation, but often a more reliable one. You can see this clearly in industries like technology. In the past, major product launches used to feel revolutionary. Entire categories would shift overnight. But today, many updates are more gradual. Devices improve year by year. Software evolves in steps rather than leaps. That's not a lack of creativity. It's a reflection of a more cautious strategy. Companies are prioritizing what works and building on it, rather than constantly starting from scratch. Another reason stability is becoming more valuable is cost. Innovation is expensive. Research and development, new infrastructure, hiring specialized talent, all of it adds up. And when borrowing money becomes more expensive, as it has in recent years, companies can't afford to invest as freely as they once did, so they become more selective. Instead of pursuing multiple ambitious projects at once, businesses are narrowing their focus. They're choosing fewer initiatives but with a higher probability of success. This naturally shifts the balance towards stability. There's also a customer side to this story. Consumers, like businesses, have gone through a period of adjustment. Economic pressure has made people more selective about where they spend money. They're less interested in novelty for its own sake and more focused on value, reliability, and trust. In other words, customers are rewarding stability too. A product that works consistently, a service that delivers on its promise, a brand that feels dependable, these things are becoming more important than constant newness, and companies are responding to that shift. Another factor is complexity. As businesses grow and systems become more interconnected, the cost of change increases. Introducing something new can have ripple effects across operations, supply chains, and customer experience. The bigger the company, the harder it is to move quickly without causing disruption. So instead of constant change, many organizations are focusing on making their existing systems more efficient and resilient. They're optimizing rather than reinventing. This is especially true in industries like finance, healthcare, and infrastructure, where reliability is critical. In these sectors, stability isn't just valuable, it's essential. But even in faster-moving industries, the mindset is spreading. Take the example of subscription-based businesses. These companies rely on long-term customer relationships. Sudden changes, frequent disruptions, or inconsistent experiences can lead to cancellations. So stability, consistent pricing, predictable service, reliable performance becomes a key part of their strategy. There's also a psychological element. After years of rapid change, both businesses and consumers are experiencing a kind of fatigue. Constant disruption can be exciting, but it can also be exhausting. Stability offers a sense of control and confidence in an uncertain world, and that has real economic value. For companies, being seen as stable can improve customer loyalty, attract more cautious investors, and create a stronger foundation for long-term growth. It reduces volatility and makes planning easier, but this shift doesn't mean innovation is disappearing. It means the role of innovation is changing. Instead of being the center of attention, innovation is becoming more integrated into stable systems. It's happening behind the scenes, improving efficiency, reducing costs, and enhancing performance without necessarily being visible to the customer. In other words, innovation is becoming quieter, but more focused. The companies that are succeeding right now are not the ones that innovate the most aggressively, but the ones that balance innovation with stability. They know when to push forward and when to hold steady. They understand that too much stability can lead to stagnation, but too much innovation can create instability. And finding that balance is becoming one of the most important challenges in business today. Because in a world where uncertainty is the only constant, the ability to stay consistent, to deliver, to perform, to endure, is starting to look like a competitive advantage. So when we say that stability is becoming more valuable than innovation, what we're really seeing is a shift in priorities, from speed to sustainability, from disruption to reliability, from constant change to controlled progress. And as this trend continues, it could reshape how companies grow, how they compete, and how they define success in the years ahead.